Hello, how is everybody doing? Hey, topic of discussion today. I wanted to talk a little bit about self-employment taxes. Hey, business owners, so if you're paying more in self-employment taxes than you should, let's fix that. So if you're a sole proprietor or a single member LLC, chances are you're paying self-employment tax on every single dollar that you profit from your business. And that's money that you should be keeping. So when you operate a sole proprietor or an LLC, the IRS, they see your profit as personal earned income. And that means that you're paying 15.3% in self-employment tax. Now that's your Social Security and your Medicare. Now on top of that, you've got regular income taxes. So if you're a business that profits $100,000 a year, 15.3%, you're paying over $15,000 just in self-employment taxes before you even factor in your income tax, right? So, but here's the good news. The right structure, you can legally reduce that amount. So this is where the S-Corporation deduction comes in. Now that's one of the most effective small business strategies available out there. And then when you elect to have your business taxed as an S-Corporation, you can split your income into two parts. Number one, it's a reasonable salary. So you run your regular salary right through your regular payroll and you pay yourself a regular normal wages, and that's what gets taxed on. And then we have, beyond that, we have owner's distributions, which are business profits. Now, these are not subject to self-employment tax. So here's an example. So let's say your business earns $100,000 in profit. As a sole proprietor, you pay that 15.3% or $15,300. But as an S corporation, you might pay yourself a reasonable salary of $60,000, and then you'll take that $40,000 as a distribution. Now, you only pay payroll taxes on the $60,000 salaries. That makes sense? Not the $40,000 distributions. So that alone, you're saving $6,000 to $8,000 in taxes each year. But here's the best part. That money, now that gets to stay in your pocket, you can reinvest it into your own business, or you can put it towards growing your own personal wealth. Now, this strategy has to be set up properly, and you need to determine a reasonable salary and file the correct IRS forms and such, and make sure that your payroll is set up and that's done right. And if it's not structured correctly, the IRS can reclassify your income and take it away, your savings, and then nobody wants that, right? So this is one of the most effective ways to stop overpaying the IRS, but timing and structure matter. And so if your business is earning consistent profit, now is the perfect time to review whether you want to become an S corporation election. And then let's look at the numbers together, and we can see how much that you would actually save. So let's book an appointment today if you would like, and then we can cross-reference and see which would be the best for you, because the smartest business owners, they don't just make money, they keep it, right? So stop tipping the IRS, start planning smarter. Okay, have a great day. Bye-bye.